Hey, Cedar Park homeowners. I'm Eric Peterson, broker and owner of Kopa Real Estate and a Cedar Park homeowner. And in this month's real estate market update, I'm going to cover the most recent real estate statistics and inventory levels, what I'm seeing in the market right now on our listings, tax savings on the November ballot, why it seems like there's apartments being built everywhere, and the most recent mortgage rate forecast through the end of 2026. Let's get into the statistics. So for Cedar Park in September 2025, there were 70 homes sold, which was up almost 46% from last year. So it's good to see the number of sales is increasing. The average sales price was $525,065, which was down 3% from last year. The median sales price was $485,000, up 3% from last year. Average dollars per square foot was at $221, which was about the same as last year. And the median days on the market was down 12 days to 37 days. One of the most important statistics to look at is the inventory of active homes on the market. So I like to compare the number of homes that are on the market today to where we were last year, but also looking at 2019, because 2019 was the last time we had a quote unquote normal real estate market before the pandemic started. And so it's always interesting just to see how we're comparing to that. So looking at October 2025, we've started out with 238 active homes on the market, which was still up considerably from last year, but we do see that that spread is decreasing. Now, part of that is because many homes are coming off the market. And we do expect, though, that although the number of homes on the market will go down by the end of the year, it does appear like we're going to start 2026 with an elevated number of homes that are on the market. And remember, if you do want to find out what it's going to take to get your home sold, we have 3 home selling seminars coming up in October and multiple other opportunities, I'm sure, for November that we'll have, and online Zoom home selling webinars as well. So be sure to sign up for one of those events coming up soon. This month, I'm going to start a new series called That's Not Going to Work. And so, believe it or not, there's 13 homes currently active on the market where it was somebody that I had talked to and they decided either to go a different route as far as who they were going to hire, or I decided that I wasn't going to be able to help them. That might seem surprising, but whenever somebody calls me, there's really 3 things that are going to happen. One is that they're going to hire me to sell their house, which is awesome. 2, they're going to decide, maybe they want to hire somebody else. Not quite so awesome, but it's okay. And 3rd is if for some reason I don't feel like I can help them accomplish their goals, I'm going to politely pass on the opportunity. So this is one of the more recent stories of a home that's still on the market. And I want you to understand something, that my business is based on trust. I have a really good business, and largely it's because people trust that I'm not going to screw them. And that might seem like it's not that important, but it's actually everything. There's like 17,000 people in the Austin area that do what I'm going to do, and people are hiring me because they really do trust me more than anybody else. And something that you want to think about, especially when there's so many homes on the market, is a buyer going to trust your house? And you're sitting there maybe watching this on your couch and you're thinking, well, of course they are. And that's because you trust yourself, or maybe you understand exactly what's going on with the house. And so, but these are very hard things always to explain to a buyer. So here's the first story that I'm going to start with. I talked to a couple about selling their house. It was a very dated home in Cedar Park, so it had a lot of problems already. In the market price of a first-time home buyer, or they'll probably wind up having to sell it to some kind of an investor. And what happened is they were telling me this long story about something going on with the plumbing inside the wall behind their shower. And it's just been that way. Apparently the house was built that way. And, but it is a defect, right? And they don't want to spend the money to go through the tile, break through the tile to have the plumbing fixed. Totally get that, right? But the problem that they have now is that this is just something that a buyer looking at this in their house, the buyer's not going to trust them. And there's no way that the real estate agent, the listing agent, is going to be able to explain this to a buyer. So a buyer's going to be thinking about this going, oh my gosh, how much is it going to cost for me to be able to fix it? We're talking about water. Anytime you got a water damage in a house, or even the potential for water damage in a house, the buyer's going to be worried about mold. And this could be an expense in their mind that could be $30,000, right, to do mold remediation. And it really is likely a very simple fix. Yeah, you got to go through the tile. Yeah, that stinks. Yeah, it's inconvenient. It's going to cost you some money. You're not going to like doing it. But on the flip side of this is what you're losing out by not doing that type of thing yourself and just saying, well, the buyer can do it themselves, or it's not really a big deal. We've lived with it for 17 years or whatever the story's going to be. You're putting all that responsibility onto this first-time home buyer who doesn't understand any of this kind of stuff, how all of that plumbing works, doesn't understand what their damages are. There's no way for an inspector to give them a realistic idea of what it's going to cost to fix that. And so this house is, maybe it'll sell at some point, but it's going to sell for so much lower than what it would have if they would have just spent like $1,000 to fix the problem in the first place. I got a million of these stories, so stay tuned for next month and I'll talk about another that's not going to work situation. If you're interested in lower property taxes, there's two propositions on the ballot for November 4th that you should know about. One is to increase the homestead exemption to $140,000, and this is just for school taxes. So what that means is that if it's a homestead property, you won't pay taxes on the first $140,000 as far as the school tax rate goes. If you're over 65 or you have a disabled exemption, that proposition would go up to $200,000. So you won't pay taxes on the first $200,000 of the school taxes there. Let me know what you think about this. I don't understand school tax financing, to be candid with you. I don't know how this is going to affect the recapture for school districts, like a lot of them around here that wind up having to pay money back to the state. So only time will tell, or maybe you know. Let me know what you think about. Leave a comment below. Here's something that we're seeing in the market that you should know about if you are planning on selling your house. There's two things that a seller's always worried about. One is leaving money on the table, and the second thing is at some point worrying that the house isn't going to sell at all. It's two things that buyers are worried about. They're worried about overpaying, and they're worried about kind of this fear of missing out, that there's always going to be a better home that's going to come on the market. And that's something that you should know if you're putting your home on the market, because we've got to get your house in that market of homes where the buyer is going to want to jump on it sooner than later. And even when I say that, and I tell these stories, right, people are going to think they're negative, but this is just the way that they are. We had two homes that closed yesterday. One of them, the buyer came for a open house 14 days before they actually made an offer. They came back with their agent later, and then they finally did make an offer. The second home, it was 16 days, right? So they came to an open house, and then they came back with their agent. And this is also why the statistics as far as like how many homes sell with an open house is a little bit skewed, because they did come back with their agent, but the first time they were there was at one of the open houses. And so this is, kind of an indication also for a lot of sellers. They have this anxiety that somebody's going to come see your house on Monday morning, and then they're going to make an offer Monday afternoon, and they will if it's a really special house. But a lot of homes right now are just kind of in the no man's land. And so the buyer looks at it and they're like, yeah, I kind of like it. It kind of looks okay. But they have a realistic expectation that that home might still be available 2 weeks later. And so this should be something that you think about when you're thinking about pricing your house, the condition of the home. What's it going to take for the buyer to jump at your property sooner than later? Now here's some kind of good news and bad news as far as apartment goes. If you're driving around, you're probably thinking, why are there so many apartments being built? It just seems that way. And the reason why it seems that way is because there are. Austin's like leading the country in the number of apartments that are being built. So you think about it, people were starting these projects 4 or 5 years ago when the number of people that were moving here and the household formations were so high, right? And so we have tons and tons of apartments, and this impacts things in a couple of ways. One is that the vacancy rate is very low, right? There's so many apartments, but the number of people moving here is not quite as high as it used to be, or certainly that relationship between moving here and people moving out. So there's a lot of vacancies. Apartments are giving away 1 month free rent, all these kind of things. And so that where it affects things, in particular, condo sales. Condos have just, condo market has really basically crashed, for lack of a better word. It also affects the rental market, because somebody can go get a brand new apartment, get 1 month free rent, get all kinds of other things that are free. It's brand new. They can just deal with that property management company, which a lot of people prefer versus dealing with an individual owner. And we have seen that the rental market has slowed down, in part because of this. Here's the good news, and this might not be good news for you if you don't want more people to be around, right? You don't want more traffic and all that, which I totally get for people who have lived here for 30 years or 40 years, but For some of us, this is going to be an incredibly dynamic area, say 5 years out. There's so many cool things that are coming here. So many young people that are moving here, so many young families that are moving here. And in real estate, we talk about household formation. So, what's going to happen is these people are going to form relationships, maybe get married, have kids. Guess what those people are going to want to do? They're going to want to buy houses. And so looking out into the future, I'm really optimistic about the overall condition of the real estate market, 5 years out and all that. Of course, that doesn't help you if you're trying to sell your house today, but it is something that me personally, I'm really happy about. And I really think the future of our area is really bright the next 5-10 years because of that. Finally, I'm going to talk about mortgage rates and a couple things. Again, you're going to accuse me of being negative about this compared to what most people are hoping for. Almost everybody that I talk to is telling me that mortgage rates are going to be significantly lower next spring. I hope so. Nobody hopes that more than me, right? But again, I go back to my January 2024 home selling seminar, and the guy was so angry with me because I just told him I didn't know what was going to happen with mortgage rates, and he was telling everybody they should wait to sell the house because mortgage rates were going to be 5% by June of 2024. Of course, that didn't work out that way. And, again, I don't know what's going to happen. The most recent mortgage rate predictions by Fannie Mae, they have just dropped a little bit from like 6.1% down to 5.9% all the way through the end of 2026. So that is a little bit lower than what it is today. Mortgage News Daily has it around 6.3%. We're seeing quotes from mortgage lenders a little bit lower than that. I'm not a mortgage lender, so I can't give you a direct quote. But nevertheless, there isn't any credible source that's predicting that mortgage rates are going to hit 5% or anything like that by next February or March. And so that should impact a little bit of what people's plans are in terms of, hey, I want to wait until mortgage rates are 5% or something like that, at least based on what Fannie Mae is coming out saying that we're, you're definitely going to be into 2027 at the earliest in terms of anywhere close to 5% interest rate. And even that probably isn't going to happen. Really, thank you so much for your support. Thanks for watching. If there's anything that we can help you with, feel free to reach out to me.